Let's go on. Imperial is next. Remember, this is the group that was founded by Bill Lynch some years ago. They've spun off stuff. Mark Lamberti, the CEO, has reorganized the business into the two parts. Rowan will tell us about those. The market cap of the entity, which remains a single piece for the moment, 38.4 billion rands. Price earnings ratio of 15.43. Dividend yield solid at 3.4%. So what is the Motus piece and what's in and what's out?
Yes, so under Lamberti they've done significant reorganisation and rationalisation, sold off the big insurance assets as well.
That was Regent, which went to Hollard.
Yes, so that took a while, and also they sort of reduced the debt somewhat. They've expanded into the UK and Europe. So essentially two major divisions, as you mentioned, Motus, which handles all the car retail, motor retail, but the whole supply chain from distributorships, which is the old AMH, so importing the Hyundai and Kia brands.
That's the master license to import those things.
And then more the motor retail, which we've been discussing, the dealerships themselves, and then the aftermarket. And then, so that's Motus, and then the logistics business, which is more their traditional logistics business, both in South Africa, Africa, and in Europe.
Exactly, Europe, because there's lots of assets in Germany and some barges that go up and down the Rhine River, and that's all good and well, and some other businesses. So let's park that for a bit. We'll come back to it when we talk the valuation. But the Motus versus the logistics business is about 50-50 or 55-45, which is bigger.
Yeah. So logistics is slightly bigger. They've been doing more acquisitions and bulking that up. The most recent one was at Palletways business in the UK, which does pallets for logistics.
Sounds good.
Yes.
But as far as Motus is concerned, they must have been through the worst. I mean, in 2015, it must have been difficult. The rand was jumping all over the show. Demand was plummeting, but now things look slightly better. I mean,
yes, so they also recently reported, as I mentioned, their volumes are down the same as the market, so down 7%. Earnings down and turnover about 3%. Obviously, with some price increases and the
So, what do you think is going to happen? Do you think they're going to bring this to the market and separate the two businesses?
So it's become an option for them. That's clearly, in the same way sort of Bidvest positioned it, two clearly identified divisions with their own management teams. So they haven't made a decision yet, but I think there is a potential. If we see a sort of improving cycle, it becomes a more pure play on motor retail,
Plus, I guess what it could do is do a transaction. So maybe a trade buyer or a merger or an acquisition in either of those two units could precede this.
That's correct.
What is great, though, is that the management team is working for you and is very focused on the idea of shareholder returns and ratings.
Yes.
We haven't even looked at the share chart yet, but it's sort of drifted around the 200 rands a share level for quite a long time now. But understand, it's been in a difficult market, so standing steady hasn't been a bad performance.
No, I mean, after the results, again, you saw quite a significant re-rating there, and I think that was sort of optimism about the rationalisation, restructuring, and the prospects from here.
So hot or not?
And this one's a bit like the discussion we had with Bidvest. I think the ratings for this is a more cyclical business. I feel it's a bit sort of more valued. I see more value in Bidvest than Imperial. I'm going to go not on Imperial.
On this one. I like the story, though, so I'm going to go hot on the idea that maybe some unbundling mojo could emerge in this process.